All right, let's move on to another one that was kind of a loved company, I think, just a year or two ago. We're talking about Nike. Their symbol is NKE. They're in the footwear and accessories industry. Short is only 3.9%, about 83% institutional owned. PE ratio, and the stock's pulled back. Even with that, the PE ratio is still 37.4 versus 29.1. Price to sales are high, 2 versus 1.6. Price to book value is 6.7 versus 4.3. Even price to cash flow, 26.8 versus 21.2. They do have a good PEG ratio, which surprises me. It's 1.8 versus 13.2. That's the only positive, because this company, even with we'll talk about Chase more, talk about the pullback, how much it's been. I know it's been huge. Still, valuation ratio is very expensive. Over the last year, here's a problem. Earnings were down 39.8%, industry down 5.3%, sales down 5.2 versus 2.3. The analysts, and these are estimates, and we do give them, but sometimes you got to question them. They have the 5-year earnings per share growth rate for Nike stock, their earnings, 25.4%. That is just a huge number. It surprises me. They do pay a dividend. Now the stock pulled back. The dividend is 2.6%. They use 82% of the earnings to pay that out. Look at the balance sheet. Current ratio 2.2. That's the same as the industry. Debt to equity 0.8 versus 0.7. Net profit margin for Nike is 6.2. That's above the industry of 5.5. Return on equity looks good, 21.5 versus 21.4. Free cash flow for Nike is pretty good. We do like companies with good free cash flow, but Nike is $3 billion, about double the industry at $1.5 billion. What do you got going forward, Chase?
There's a current price here for Nike. Again, their ticker symbol NKE. It's $63.92. And he said, they were kind of in favor a year ago. Actually, time just flies. They really haven't been in favor since 2021. 2021 is when they peaked around $180 a share. That was at the end of the year. But really, since then, they've kind of been on a steady decline.
And I thought that was like a year or two ago, but it was 180 was 4 years ago.
Yep. Yeah, wow. The end of 2021. And then the 5-year return, obviously, now we're at about that 2021 level. 5-year return down about 54%. Year to date, the stock is down about 15%. So, Elliott Hill, the new CEO, he definitely has some tasks, I guess, to say the least, to get this going in a different direction, because it's really been a struggling, to say the least. Looking at valuations, though, it is still not overly appealing. You go out to May 2027, estimated earnings per share here, $2.35, gives you a target sell price of $39.01, still trades at about 26 times future earnings. The reason, though, this could be appealing is this the bottom for earnings for Nike? Looks like this year earnings are estimated to fall about 28%, but then next year they're expecting earnings to grow about 50%, so they could be now growing off a very low base and could see large earnings growth to maybe justify a higher multiple. But, it's I'm going to say still some lofty expectations for a company given that multiple.
And the reason why we're so conservative when it comes to buying these high flyers, you didn't point out the 10-year return. Did you see the 10-year return?
No, I didn't point that out.
14.7% over 10 years. And this was like, it's Nike. Oh, you can't go wrong. That's
barely... But your first 5 years, you were probably up close to 100%.
Yeah. And so, no, I want to sell it. This is why we say don't base holding on to it just because it's done well. Because, again, you probably had a period where you were up quite substantially, and now, over 10 years, up, less than 15%. So this is why it's so important to understand the business. I think they are having trouble with the tariffs because of China. I think a lot of the products made in China. Again, we talk about understanding the business. When I saw this drop, I said, hey, maybe we should look at buying this. Still.
A couple of things to add to on Nike. They did report earnings, and they fell after reporting earnings. It was kind of a little bit of a surprise because they had better than expected earnings and revenue, but the thing that seemed to weigh on them was sales in China dropped by about 17%, and that's still a decent-sized market for them, I believe. So, there is some concern there. The other thing, too, I grew up loving Nike. When I was playing football, I always wanted Nike. We were sponsored by Adidas in high school, or we had to kind of get Adidas. Right. So I guess we weren't really sponsored by Adidas. You're not sponsored in high school at that point. But we had to get Adidas. And it's like, man, I want to get Nike. So Nike had that kind of brand affiliation where, like, man, Nike is just kind of on the pedestal. But now things have kind of shifted. If you look at, On Cloud, for example, that's the new shoe. And I'm going to use my personal experience. I used to always buy Nike. Well, my household this year, my wife wanted On Clouds, and she got me 2 pairs of On Clouds. There was no Nike in the household, which is very different from, I guess, years ago. There's been new entrants. You talk about Lululemon. Nike didn't really have to battle these other athleisure companies. I think the pie has gotten larger, but there's been more entrance into that pie, which I think has made more competition. And I think Nike is kind of not really the cream of the crop like they used to be.
Well, competition is very hard for businesses. That's why we don't like to overpay for business.
Yeah.
We want to have good earnings, low debt, because again, competition, it happens all the time. That's what's great about a capitalist society is competition can bring down prices. I don't even know where to buy those on-cloud shoes you're talking about, but I do know they're a competitor, and I don't see Nike ever coming back the way it did. Now, maybe, what was the target sell price you came up with? What was it?
It was $39.01.
So not even
close.
Not even close. So even, and I was going to say, even if it goes up, target sell price to 80 or something, I still think they have a tough road ahead. Competition, who knows? We talked about the tariffs at the beginning of the show. What if they stay there? It's a tough road for Nike.
We've done well buying retail in the past, but at attractive valuations, because you generally want to buy these companies when they're going through a restructuring, which
Right.
Nike is. But if they had valuations that were more attractive, I think I'd be all over it. But
Yeah.
again, the concern is the valuations aren't that attractive. The last thing I know we got to move on here that I wanted to add was Tim Cook did actually buy about nearly $3 million worth of Nike, which gave a little bit of lift to the stock.
Right.
And he's on the board. That's why he bought it. It's not just kind of random. Hey, I like Nike. But I do have to point out, obviously, Tim Cook is worth a lot more than $3 million. So I don't think it really moves the needle in terms of his investment portfolio.
Yeah, he's a
He's got
billionaire.
to be worth $1 billion at least.
Yeah. So for him to spend $3 million, like, okay, we'll just throw a few
just
dollars at
quick Google search says $2.6 billion.
it. Okay, yeah. So a $3 million investment for him is, like the average person doing maybe $20.